DePratto of TD Economics to help us go through some of these numbers. Brian, as I talk, let's first start with the U.S. and those retail sales. Whether it missed or beat, it's a lower number. It does represent deceleration, big deceleration from what we saw in the month of June. What does that signal to you?
To me, it signals the fact that we're nowhere near the end of the road in terms of the economic impact of this pandemic. But you still have the challenge there that a lot of those support measures are rolling off a little bit. They were coming off in July, the special payments and things like that. So just as we saw, that backstop really support things in the earlier months, it's not super surprising, maybe a little bit weaker than we would have thought. But seeing that deceleration, you still have a very high unemployment rate and you're losing a bit of those supports. Unfortunately, not the most surprising outcome.
And paired with the latest read on inflation, how troubling is that prices are going up, shoppers are potentially staying at home, productivity is low. Is that a concerning trend for you?
Right now, it's hard to get too worked up about inflation. We did have a little bit of a bounce back, as you mentioned there. If you take a little bit of a longer term lens, I think right now we're seeing a little bit of a supply driven shock. I think the bigger shock is probably going to be the demand driven shock, as we saw in the retail sales side of things, where, if you're not having the income support there and the demand for spending, then you could actually see a little bit of downward pressure on inflation. I think that 1 month is a little too early to really say a lot about that broader trend.
And bringing it to Canada, those manufacturing sales, they are pretty backward looking considering we're in August and we're talking about June numbers, but that showing an advance over the prior reading and coming in better than expected with growth of 21%. What does that say about the pace of recovery in the manufacturing sector in this country?
It's encouraging so far. As you mentioned, this is not the most current number, but it is nice to see that confirmation. The number coming in even a little bit stronger. StatCan did these mini forecasts. We're seeing them exceeded here. They didn't actually offer us, as far as I could tell, an early read on July. But again, there's that. It's consistent with what we saw in the trade data, and that's that. As the factories have reopened, they have really resumed activity, for lack of a better term. You've seen the supply chains sort of pick back up. Looking through the details here, I see the new orders up almost 25%. That's encouraging that we could see some more momentum sustained as we get into those summer months.
Yeah, I'm just trying to see if there is a preliminary July number, just going through it right now. As I do that, I'll just give you a little bit more color on what we saw when it came to manufacturing sales, rising in every single category. So pretty broad-based, up in all 21 industries that are tracked, led by motor vehicles and motor vehicle parts industries. However, these are big numbers, but as you say, it's important to put them into context. Total manufacturing sales in June, still 13% below the pre-pandemic levels of February. So I guess that is our benchmark, right? We're coming off of a low base, so that's why we're getting the big numbers, but we're still 13% below those pre-pandemic levels.
That's absolutely right, Amber. When you look at these, these are eye-popping numbers. If we were talking about double-digit manufacturing a year ago, would have been, uncork the champagne, so to speak. The challenge is we had double-digit decline, earlier on with the pandemic. So there really is, a fairly deep hole to still work our way out of here. That's true, not just manufacturing, but more or less across the board, labor markets, retail sales, things like that. Particularly here in Canada, where, as great as these things are, there's still a pretty long path ahead of us to even get back to normal, let alone where we would have been if you think no pandemic, you would have had that upward trend, hopefully still there. We're well shy of that as well.
And so many times in the past when we talked about manufacturing, we would talk about it in relation to the dollar, in relation to trade policy. But does anything really matter right now beyond just demand returning?
I think that that's you hit the nail on the head. There's going to be this resumption. There's that risk, though, that as things normalize, if you don't get the demand there to, take away that capacity, right? If people aren't buying cars, aren't buying, you name it, you get the risk that you could see a supply overhang, right? That you get overproduction, and we know, supply overhangs tend to be associated with downturns. So there's a real, balancing act that has to occur here. We don't, you want that capacity to come back on. You don't want to get supply constraints, but you also don't want to supply overshoots. So I think, businesses and people out there are really, trying to find that fine balance and really just trying to figure out and assess just what that path forward looks like, right? We're through the worst of it here, but again, we're not nearly at the end zone. So getting from here to there is still definitely a challenge and something that's, is probably going to drive a few bumps on the road on both sides.
Just turn our attention for the last question back to the United States, that kind of tepid sales growth, retail sales growth in the United States. As we await any more details on the stimulus bill, what does that say about the urgency to get things done? And as we see the virus resurge there, about the fickleness of the consumer?
It really does underscore the need, I would say, for a more comprehensive, cohesive, sort of longer term, stimulus or just, system, right? You see these challenges when you start to have these sort of, cliff-like events where, you have a major payment and then it just kind of ends. Well, that's very difficult for people to plan for. And so you see that reaction, let's keep in mind retail sales, they had a bit of a V-shaped recovery in the States, right? As of the prior month, they were actually above the pre-pandemic levels. And now, we've lost a lot of that pace. Still positive, let's be clear on that. But, again, there's that long road that really underscores that need. Look at, for instance, initial claims data yesterday. Sure, it dropped below 1 million, and that's great compared to what we saw before. But, we never even approached 1 million initial claims in the great financial crisis, right, 08, 09. And the ongoing claims are still extremely elevated. So there's that risk, I think, that, you celebrate a little bit too early and you relax a little bit too early and then you lose some of those gains. I think that's really a key risk for the U.S. outlook right now.
Thank you very much, Brian, for all of your thoughts and insights in that instant analysis. That's Brian DePratto with TD Economics joining us. And